Hello, everyone. Thanks and welcome to the panel session on capitalizing on diverse structural growth tailwinds in Asia. When we think about structural growth in China and Asia, there are a lot of positive development in both regions. But before we dive into the details, let's explore why and what makes China and Asia attractive medium to long term. So maybe we will start with KK. Over to you, KK.
Yes, I mean, it's difficult to envision that seems like there's a lot of challenges China is facing. We have declining birth rates, peaking labor force, and rising geopolitical tension between US and China. But yet, we still see bright spots in different areas, especially in areas of innovation. Because given the tension between US and China, there's a big push for localization in semiconductor and software. And now we have a 7 nanometer chip. Of course, now people question how much can they produce, but it's a good step. That they also showcase the powers of Chinese innovative capabilities. Other than semiconductor or technology, there's also a big push for localization in terms of automation in advanced manufacturing, especially in the likes of EVs and including EV batteries as well as solar equipment. And last but not least, the new trend of AI. I think China could be late, but they won't be absent in this. And I'll elaborate more later. And the other area that is interesting is biotech companies. They are also emerging giants coming up from China. The other theme we like is about consumption upgrade. Given the large rising middle class in China, this theme is a favorite among the Chinese investors. Of course, this theme has been evolving. Used to be buying of cars, buying of EVs, and now it's more about less goods, more services. I think there's a big pent-up demand in traveling. So we in the medium term, we think traveling and other services are going to grow faster than the GDP. And there are actually good winners emerging from that segment as well. And also there's a emerging of what we call 国潮, domestic brands, especially in cosmetic and sportswear. There are interesting leaders also appearing in that segment that is worth to invest in. And last but not least, about policy tailwind, more especially on the renewable energy and as well as SOE reform. So although things could be challenging, but we are seeing that the Chinese central government has actually had a 180-degree turn in terms of policy support on the market, and that has happened in end July, but it's likely to be they're likely to do more fiscal and monetary stimulus going forward.
Thanks, KK. So King Lin, over to you. What makes ASEAN attractive medium to long term?
ASEAN is very attractive, right, fellow ASEAN members? Okay, so we think about ASEAN. It's a region with 592 million of population, close to almost half of what China has and India has. So it's not a small region when combined. And they have a combined GDP of $3.5 trillion US. And the economy is growing at 4.5% of GDP. So what does 4.5% of GDP means? That it's almost as close to the growth rate that China is experiencing, but it's faster than other developed markets as well as other emerging markets. So it's a region that is growing at a healthy rate with a strong base of population that forms the domestic consumption base. Now, the second thing is the region is benefiting from the geopolitical contest between the US and China. And that has actually caused or allow many of the other industries to develop as a result. I'll go into deeper details later. And finally, you have each country will have their own niche and comparative advantage. So just to give you an example, you have Malaysia and Vietnam being strong in electronics and semiconductor manufacturing. You have Indonesia now emerging as the important upstream player in EV supply chain, and they will move downstream going forward. And then you have Thailand being the hub for tourism, as well as now is growing to be the potential for EV sales by the Chinese EV OEMs. And you have Singapore as the Asian financial hub, which is emerging very strongly in the past few years. And lastly, I want to talk about valuation. From a valuation perspective, the ASEAN region is now trading around one standard deviation below the long-term average, which is around 13 to 14 times. And the return on equities is not well reflected by the pricing in terms of price-to-book ratio. So you have a region that's growing, but it's not well discounted by the market.
Thanks, King Lin. So looking at technology advancement and innovation, such as artificial intelligence, electric vehicles, there are a lot of supportive policies recently in China and also ASEAN. So KK, over to you first. What are the greatest opportunities for innovation and technology in China in your view?
Actually, it's more Greater China as well, including Taiwan. Especially Taiwan tech supply chains is actually gaining a lot on this AI initial ramp. What we call the stage one, the training part, where a lot of focus is on building on infrastructure. And this focus is likely to last for the next 5 years. You can see from different kind of on hardwares, on semiconductor and networking. All this build up will drive growth at least 30% in the next 5 years. This is a CAGR. And why is this so? Because AI now we are still seeing the stage one of AI, which is the training phase. We are transiting to stage two. We call the inference phase. When you do more inference, then that means application starts to come out, and as user use more of this AI application, then they need more infrastructure support, and as a result, then there will be driving to more adoption. The last phase of development will be what we call edge AI, where your phones and your car become AI enabled. I mean, you look at it, you need a AI enabled car to have a full SD, full self driving capability. So this is the ultimate development for AI, and we are seeing a good pathway to that. Other than AI, there's also a big benefits that from advanced manufacturing take off in China, and you could see there's an increasing needs of automation, given that labor force is peaking in China, and the youngsters are not willing to work in factories anymore. So there's a big move into automation. And also when the Chinese manufacturers go overseas to set up plants, they also bring forward their equipment manufacturers as well.
Thank you, KK. So King Lin, what are the greatest opportunities that you see for innovation, technology, as well as industrial for ASEAN?
Right. So we look at this in three main areas. So number one, if we think about the foreign direct investment flow into the ASEAN region, can we move on? Yeah. So if you look at the slides, the charts here, you can see that the FDI flows has actually improved significantly over the years, especially since 2016. And the global share of FDI in Southeast Asia has actually grown to 14% as of 2020. But the latest number by 2023, that's gone to 17% of global share in terms of FDI that's flowed to Southeast Asia. Now, where have they gone to? In two areas of big innovations that's happening, or I would call the structural trend that's happening globally. Firstly, is the semiconductor. Maybe can we move on to the next slide, please? So semiconductor, there are two big FDI flows coming into the region. One from the US, which is mainly focusing on the tech sector, semiconductor. And then secondly, it will be on EV, electric vehicle, which I'll touch on later. Now, focusing on semiconductor, US is now the largest FDI contributor to ASEAN, 17% of total FDI flows to ASEAN. And that's the largest after the intra-ASEAN flow, which is 14%. Now, why have they invested in ASEAN in such a big way is because of all these geopolitical contests and for security reason, they're moving their plants over to Southeast Asia. And the two countries that benefited the most from this is actually Vietnam and Malaysia. Now, for Malaysia, a lot of people would always think that normally when people move their production to Southeast Asia, they'll move the low-end tech production first, and they will keep the high-end in their own countries. But if you look at this chart here, which I want to highlight, you look at the yellow bar, that's actually high-tech. So you're seeing high-tech production being moved to Southeast Asia at the same time. And now Malaysia now accounts for 45% of the global share of export of semiconductor. So that's how important it is right now as one of the countries that's receiving the FDIs. And then Vietnam, of course, is getting a lot of FDIs from companies from the US and China trying to diversify away their production base in the electronic segment, especially in the smartphone and handset segment. Now, as we move on to EV, can we move on to the next slide? Now, this is a very big story because China is one of the leading countries in the world that has developed a lot of EV, and they're now trying to sell their cars globally. And one of the main focus areas is actually Southeast Asia. Now, to make EV and to sell EV, you need EV batteries. And who can supply the raw material to them is actually Indonesia, because Indonesia is the world's fourth largest supplier of nickel in the world. So it's a very convenient ground. And the government has actually encouraged companies, especially from China, to invest in upstream assets to help them add value to the nickel ore. So what happened was back in 2014, the value added material that's coming out of Indonesia was only $1 billion US. By today, or end of last year, it's reached $34 billion. So it has jumped 34 times. What this has done is actually it has improved the current account deficit of Indonesia, which would actually help mitigate volatility of liquidity flows in the country going forward. Now, moving on to the next country in terms of EV supply chain will be Thailand. Now, Thailand has already got the reputation of Detroit of Asia because back in the old days, Japanese have been investing heavily in the auto supply chain in Thailand. But because Japanese now are mainly focusing on ICE, which is the traditional cars, the Chinese now wants to build a supply chain of electric vehicles because the Thai government has provided a lot of incentives to attract investments in this area. So I just visited Thailand recently. A lot of these Chinese companies try to set up a production base there, and they want to be the right-hand drive hub for export of EVs to countries that have right-hand drive in that sense. So when they go build factories in Thailand, the government want them to localize their production of parts and components. So then that will actually create opportunities for company investing in charging facility, building battery assembly and manufacturing, and then industrial estates are also selling well these days. So that has created a lot of opportunities and drivers for the economy in Thailand. And because of that, the demand for EV in Thailand has also been very strong. And 80% of those EVs sold in Thailand are actually Chinese brands. Similarly, also selling aggressively in Indonesia. So these are the opportunities in terms of innovations within ASEAN as well as manufacturing.
Thanks, King Lin. So looking at industrials, we have witnessed the rapid development of advanced manufacturing in China, as KK mentioned. If you look at the last couple of years, basically China has been upgrading its value chain and be a leader in solar batteries and also EV production. In terms of opportunity set, what are the greatest opportunities within Chinese industrial? And KK, what's your take in terms of the cycle and also the localization opportunities?
Yes, definitely. From this chart, you can see the so-called capital expenditure for the Chinese manufacturers have not stopped during the COVID years because the rest of the world has been shut and China is getting more export orders. That's why the capacity expansion continues into 2122 until the lockdown of Shanghai and subsequently the rest of China. Then capex start to decrease rapidly, as shown in the chart, and it's still falling until maybe recently you start seeing mild pickup in machine tools as well as other automation orders. So usually this type of downturn it will last for 4 to 5 quarters, and more likely than not, you could see more equipment orders picking up by end of this year or latest next year when the export market starts to pick up as the global interest rate start to peak as early as first half next year. So, but the focus now is not just building capacity; it's it's more focused on replacement on labor and also a big trend of localization, not only on semiconductor or technology. Is more about different machineries. As you can see from the next chart, the Chinese the automation companies are actually moving up the value chain as well. They are now talking about RV reducer, which is only 15% self-sufficient in China, and likely to be at least 40% in the next 8 years. And as the people involved in these RV reducers are actually meeting global standards and has come up with products that are acceptable by the Chinese manufacturer as well. So not only RV reducer, we can see hydraulics, even X-ray machine localization rates expect to go up much higher than the current levels. That's why this is offering a lot of opportunities for industrial company in these segments.
Thanks, KK. So move on to healthcare and consumer sectors. We are seeing demand for drug innovation, pharma, better lifestyle, better healthcare services. So KK, what are the greatest opportunities that you're seeing on the ground for healthcare and consumer in China?
I'll talk about healthcare first. Of course, there used to be a quite vibrant biotech sector. Of course, with the higher interest rate, these before-profit companies are suffering. But given the investment so far the last 5 years, you can see giants appearing. Some of them even getting FDA approval. One of the company, I shouldn't name who, has a drug that is PTK drug, which is actually going for first in class and is replacing a US drug company in terms of treatment on some cancers. So this is a good start, and you can see more and more of these globally approved drugs being launched by Chinese company, and there's definitely a very good growth opportunity. The other big oncology drug that is segment that is growing quickly is called what you call ADC. I think it's a bit technical, but it's something that the Chinese biotech companies are dominating, and this also drives a lot of what we call the outsourcing CROs, CDO business to Chinese service support company that do contract research and development and outsource. They are actually global, becoming the global top 3 in terms of these CRO companies. So these are what we see interesting opportunities. Regarding consumer, then as I mentioned at the start, we are very positive on service sector, especially related to the travel areas, the likes of hotel chain. Hotel chain in China penetration is just 20+%. 30+%. If you look at US, it's 70%. So there's still a lot of room to growth. And given that the COVID lockdown, there's a tightness in supply, and these hotel chain companies are actually going to benefit from higher day rates and higher occupancy in the next 2 to 3 years as pent-up demand get eased off. The other side, the other consumption we like is also about outbound travel. You know that the flights recovery in China is still 50%. You hit 70% by the end of the year, so there'll be definitely more outbound travel, and that area we think some of the online travel platforms will do very well.
So, King Lin, with the rise of medical tourism in ASEAN, what are you seeing on the ground, and where are the greatest opportunities in ASEAN?
Right. So ASEAN is not only strong in tourism sector, but also healthcare tourism. So when you think about healthcare tourism, 3 key countries that are doing very well: Thailand, Malaysia, and then Singapore. So for Thailand, it's actually got a very big industry there, and they have been serving patients from the Middle East. So why do the Middle East like to seek treatment in Thailand? It's because apparently diabetes is the highest. The Arabs have the highest number of diabetic patients in their own country, and they will actually travel to Thailand as part of leisure, as well as seeking treatment for their diabetic problem. So in Thailand, they have a lot of specialists, and there are a few key hospitals with this one specialist that will receive a lot of patients from the Middle East. And when you arrive at the airport in Thailand, you ought to pay attention. When you're on the way to the taxi, you will see that there are a lot of actually hospital booths there to receive their patients and take them to the hospital as part of their hotel experience as well as healthcare experience. Now, Thailand is also strong in aesthetic, that means cosmetic surgery, and they're becoming stronger in that area. And they are developing the IVF, that means the fertility industry as well, which they would target market within ASEAN as well as China. Now, so that industry, people will always question, do they have enough doctors? Thailand actually produces 10,000 doctors a year. So that's more than enough to serve whatever demand they can get out of it. Now, another area is within ASEAN, the ASEAN patients, how do they get the best healthcare services for themselves? You can think about Indonesian used to travel to Singapore for treatment. But because of the strength of the Singapore dollar, they are looking for alternative, and Malaysia has become a more popular destination. And I've even learned from a hospital operator in Indonesia that they're inviting doctors from Malaysia to go to Indonesia to provide treatment to their patients. So you're seeing a lot of activities around that area. And then what happened to Singapore then if they've lost their Indonesian patients? Also not lost, because then the patients from the LCMV region, Laos, Cambodia, Vietnam, and Myanmar, the wealthy groups, when they need healthcare services, they tend to travel to Singapore for treatment. And also Singapore is strong in treating the critical illness. That means the very intense treatment with high intensity. Singapore will be able to provide that service. So on that, we have to acknowledge that Southeast Asia has the strongest base of JCI accredited hospitals. So what does JCI mean? It's a very expensive process to get themselves certified, and it's actually the gold standard of healthcare service. So a lot of opportunities there.
Got it. Thanks, King Lin.